As now is Dan Geltrude, who's the managing partner at Geltrude and Company. Dan, good to have you here with us this afternoon. We've got new record closing highs for the Dow, the S&P, and the Nasdaq. Another day with some movements, significant movements in the markets, even though it was, kind of minor. It was still to the upside that netted us some positive gains and thus record closes. What has changed in recent days to really kind of accelerate this rally further, even in spite of some headwinds that have been faced along the way?
I'll tell you one thing that hasn't impacted, and that's what's going on in Washington related to the impeachment. It just goes to show you that the market has looked past that event. The outcome is, well, everybody knows what the outcome is going to be. It's going to be acquittal. Unless something really major happens, you're not going to have 17 Republicans move in the direction in voting for a guilty vote, in other words. So he's going to be acquitted in the Senate. And basically, this is a process that is distracting people in Washington, D.C. And the market is looking past that. The market is looking at what is Joe Biden going to do. I think what the market sees right now is there is going to be stimulus. How much, we don't know. A lot of that may, quite frankly, rely on what the senator from West Virginia thinks, which is Joe Manchin. So depending on which way he votes is going to be how much stimulus could be in the game. And it's not just stimulus. It's also related to that big issue of $15 an hour minimum wage and how that's going to impact so many businesses across the United States. So I think impeachment is already in the rear view, and the market is looking forward to what is going to happen as far as stimulus.
We still find ourselves squarely in earnings season as well. We had some big names this week. Disney perhaps blowing them all out of the water with its results that came in, even in spite of a parks and experiences division that is lackluster because of the pandemic, and you're still paying close attention to exactly what the company says on reopening, just as we've been paying attention to what healthcare professionals, some of the CEOs of even Johnson & Johnson, what they're saying on the realm of reopening and at what capacity we'll be able to do that, and the fact that this could be an endemic that we get booster shots for years from now as well. And so what do you look at within the economy to kind of signal that we would be able to handle such a future and that companies would be able to continue to navigate the scenario well, as in Disney's case?
Well, directionally, I think every business in the United States is looking at where the pandemic is going to take us. Now, certainly it's very uncertain because no one really knows, as you just alluded to, how effective are the vaccines going to be on a long-term basis? How many waves are we going to have? But as it pertains to the market, it comes down to how are companies going to be able to evolve and adjust to what's happening, not just in the United States, but obviously the world. Now, if you look at Disney, obviously you had the pandemic take down the amusement aspect of their business, but at the same time, we see how the streaming is skyrocketing. So the world is changing here, and it's changing on a, I say, semi-permanent basis. People are going to be doing more things from home. There are going to be more remote activities happening. So which companies are going to give the people what they want? And that's where I think we're headed in terms of what companies out there are going to be successful in the future, and that is what's going to move the market.
That does spell out still a large unanswered question as it relates to a few sectors that depend directly on people going into the office, going into work, whether that be transportation companies, whether that be some of the food and local restaurant services companies and events companies, all of the things of that realm that are very much hinging on people actually passing through these major metropolitan areas or major corporate areas as well in some parts of the country. And so with that in mind, how do you look at the rest of where this could shake out for a lot of those smaller businesses and how that plays into a broader economic recovery?
I think certain industries are going to be permanently impacted by this. Certainly, not as many people are going to be commuting back to the office the way they had prior to the pandemic. So it's not just on the surface, you'd say, well, what's going to happen in the real estate market related to commercial office space? Clearly, there's going to be a change there, and we're going to have to see how they're able to adjust to that new market. But now you have all these ancillary businesses that rely on people moving, such as travel and entertainment, and of course, restaurants. So I believe what's going to happen here is it's not the strong survive, it's those that can evolve survive. So how do they change their business model, again, to go to what people want? If people are going to be less mobile, that means you have to figure out how to get to them. And that's where I think the United States economy is going to adjust on a permanent basis. And we are probably going to see ideas that haven't even been thought of yet that are going to come to the forefront. And after the fact, we'll say, well, isn't that obvious? What a great idea. But right now, as we're looking at, we're into basically a full year of this. I suspect we're going to be in this really through most, if not all, of 2021. And who is going to come up with the next great idea to change the world or to adjust to the new world?
Dan, I don't believe I've been able to discuss this with you yet, but would love to get your thoughts on the quote-unquote Reddit investor or social investor or whatever you're calling this type of personality or profile, meme stock investor even, and especially considering your position and how you have also evaluated the markets over years as well. You know, what do you make of the retail investor right now and the fact that we've seen so many of them band together to the point where it has seemed to influence, notably, some of the stocks and change how even some of the most noted either hedge funds or short positions evaluate their plays in the market?
Right. So, you know, GameStop, who would have thought about this before a couple weeks ago? But now we see what's happened here with retail investors. And we have to, as hard as it is, really ignore all the headlines, because the headlines always drive emotion because they're trying to get people's attention. If we really look at what happened there were a lot of retail investors that got burned. And they got burned because they were chasing the shiny object. As you take a company like GameStop, as that stock was going up and up and up with no value and no real reason of substance for that stock to be rising like that, people are jumping on because they're trying to time the market. They think they're going to retire, whatever these visions of grandeur are. But the reality of it is it doesn't go that way. A retail investor, a day trader, however you want to label them, really should not have a different point of view than anyone else who's in the market. And it's not about timing the market, because that's only based upon luck. You really have to be someone who understands the market and willing to take positions based upon value, not what's going on with hedge funds. Now, and speaking of hedge funds, let me say this. Hedge funds have been shorting stocks for a long, long time and making a lot of money doing it. And there's nothing wrong with that. As far as I could see, that whole situation, there wasn't anything that jumped out as being illegal. Maybe there was some manipulation, and I assume that investigations will uncover that. But if you look at the hedge funds that were shorting the stock, okay. The point there is, though, shorting it at 140%, going above 100%. Now, what that did was signal to a group of people to band together and go in the opposite direction. I'm going to make an assumption, though, that the hedge funds are going to learn their lesson, that ultimately the market writes these things, although, again, there'll be investigations. Congress is going to get involved, the Department of Justice, of course, the SEC. But I'm not sure that they're going to be able to exactly put their finger on something without over-regulating. And that's the danger, that you ultimately, these regulations ultimately end up stifling more of the little guy than the big guy.
Dan, appreciate the time and perspective as always. Dan Geltrude, who's the managing partner at Geltrude and Company, joining us here today after the market close, everyone.